Hi there, welcome to Nepi Invest. Today I want to talk about a company called Cirralto. This is a company fairly popular on the ASX, particularly from about the middle of 2020 to the start of this year. We did see a significant rise in the share price. In fact, it's almost 100 bagger for any shareholders who bought at the low and then were fortuitous to sell at the high in February at 20 cents, or I think it was 21 cents. Cirralto is a company I've been following for quite a few years. In fact, when I started following this company, they're actually under a different name called Motopia with the ticker code MTO. Motopia bought Cirralto in late 2017, and actually things were looking really good at that point in time. Unfortunately, Cirralto, even though they were increasing cash receipts, revenue, almost becoming operational cash flow positive, Cirralto was dependent on Telstra, and I am very wary of any company that is reliant on Telstra because Telstra can be like a jealous boyfriend. And if you are succeeding in your business, Telstra will come back and try to squash your success. We've seen that quite a few times over the past few years. So in July 2018, because Telstra went through this restructuring and Cirralto were no longer participating in the Telstra digital commerce program, so really, Cirralto had to change their business model. This was in July 2018. Share price fell something like 35% in 1 week and then just kept on falling for about 2 years, just shy of 2 years. Share price got to a low of 0.2 cents in April 2020, and then we saw that 100 bagger share price increasing from 0.2 to 20 cents. Over the past 4 months or so, since that high in February, the share price has pulled back from 21 cents to a current share price of between about 5 and 6 cents. We still see a fairly high market cap, about 160, 170 million, and not much cash receipts or revenue. So at this point in time, even though they do have a high market cap, they need to prove or justify that high market cap by increasing those cash receipts. That's the one thing I'm waiting for with this company right now. Before we talk about the Appendix 4C, the whole point of me doing this video, just a few facts in regards to Cirralto. Cirralto is a transaction services business with a broad range of B2B or business-to-business payment services, digital trading, software, and integrated solution. They do have partnerships with MYOB and Xero, and one of their products is called Spender, which is a fully integrated digital payment and business software solution. At one point last year, when the share price was rising, they did receive an ASX price query, and they did have to explain why the share price was increasing at a significant rate on higher volume. And they just threw in their 4 names: Afterpay, Zip, it was Split It or Sezzle, and they just said all these companies, their share price is running, and so should ours. So that's the sort of the business they're in, that area, not quite buy now, pay later, but in that realm of business. Anyway, market cap 174 million. So there is a little bit of froth with this company, particularly when you look at the revenue, only $700,000 of revenue in the trailing 12 months. It is growing slowly, but not really significant growth, and operational cash flow negative. However, they don't have high costs. So if they can increase those revenue or cash receipts, they could become operational cash flow positive quite quickly. Price to sales ratio 250. That's on a low base. They could really quadruple, that revenue or sales within a very short period of time, and that price to sales ratio would come down a fair bit. If you want more information on Cirralto, they released their Appendix 4C on the 26th of April. This is their Appendix 4C operating cash flow statement from that. And the main reason, I'm not really buying into Cirralto right now is just the lack of cash receipts. So only $294,000 of cash receipts. Some people might say, well, it's all about the future with this company. At this point in time, with the market cap of 174 million, I want proof of their business model moving forward. So that's all I'm looking for now, is just a little bit of proof. So $294,000 of cash receipts, and they were operational cash flow negative by only $781,000. Again, if I do if they do find traction in their business model, do increase those receipts, this company will become operational cash flow positive quite quickly. They began the quarter with $3.9 million of cash and finished it with $23.8 million. And the reason they grew their cash was because of a significant capital raising through the quarter, a placement. I'll talk about that placement when we look at the charts. Before we look at the charts, just want to look at the cash receipts trend, which is quite important. We want to see if the receipts actually are growing. Even though they're fairly low, they still want to see a bit of growth. So let's have a look at that right now. This is the receipts history for Cirralto from when they changed their name from Motopia back in late 2017. So the first quarter is the December 2017 quarter. We haven't really seen any significant growth through since then. In fact, the most recent quarter of $294,000 was not the high. In fact, the high, you have to go back to the June quarter of 2019 when they received $308,000. We did see a fair bit of a drop-off during or around the COVID-19 financial panic. The receipts went all the way down to $68,000, but the receipts have grown since then. So 5 quarters, or actually it's 4 quarters of growth in receipts, but still really low for my liking. However, as I mentioned already twice before, there is potential for there is good gross margins within this business, and if they don't increase their cost to try to increase their cash receipts and their revenues, this company will become operational cash flow positive quite quickly, and that would be a good inflection point for this company business-wise. Again, one of the reasons why I'm not quite interested in this company right now is the valuation. $174 million is a little bit rich for me based off the cash receipts. So I either want the cash receipts to grow significantly from here or the market cap to come down a fair bit from here. So now let's have a look at the charts. We'll focus on the weekly and daily charts for Cirralto. Briefly touch upon the weekly chart for Cirralto. This goes back to when they changed the name from Motopia to Cirralto back in late 2017 or early 2018. We did see the company get some headwind and we saw the share price increase. Things were looking good. Unfortunately, that Telstra restructure, which happened on the 27th of July 2018, and share price went down 34% in 1 week for Cirralto. And it kept on dropping for the next 2 years until we did see the share price reach a low of 0.2 cents in April. Now we'll just transition to the daily chart because I want to show you the share price action from that low in April 2020. A really nice uptrend for Cirralto from that low at the share price in April 2020. This was a 100 bagger from that low to the share price high on the 17th of February 2021 when the share price got to 21 cents on really high volume. In fact, the previous trading day, the share price increased 47% from 6.8 cents to 9.9 cents on no significant news. And then the next day, the share price actually increased over 100% from the open to the high. But a lot of selling came into the market during that day. You can see the share price high of 21 cents, and then the shares closed at just over 11 cents, about 11.5 cents. So a lot of selling, a lot of profit taking. The company decided, or the management decided, to take advantage of this significant increase in share price. And on the 22nd of February, I think they went into a trading halt on the 18th, and then they announced a share placement on the 22nd of February. It was an $18 million share placement on that date. And ever since then, the share price has been dropping. So it seems like that capital raising put a bit of a lid under the share price rise. But I think it was a very good move by manager. You want to increase the cash on hand whenever you see the share price rise to these fairly significant levels. We did see the share price get down to around 5.5 cents in May, and then it bounced off it. And we've just seen that level reached again. So that level of 5.5 cents could be support and could be, I'm just saying could be, potentially a good position to take a holding if you are interested in this company. If this level holds, if the share price falls through this, that would be bad news and fairly bearish. But if the share price rebounds off this again, that would suggest that 5.5 cents is a good support level and a good price to take a position in this company. That is all I have for this Appendix 4C March quarter 2021 for Cirralto. If you have any questions about this company or any other company on the ASX, I'll gladly answer anything you have to say or ask. Last thing I should mention is I'm not a financial advisor, so if you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's all for this video. Have a good day. Bye.